Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, July the 13th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any system or methodology is not necessarily indicative of future results. I mean, all of that out of the way. Not a whole lot of economic data across the pond. We did get some CPI numbers out of Germany in line with expectations. Actually came in line with what was previously released, same with the French. Then here in the United States, we got producer price index month over month coming in slightly higher than expected. 0.1% was expected to be unchanged, so better than expected there. Unemployment claims came in slightly higher than expected, but for all intents and purposes in line with expectations, just off by a couple of thousand. And then they did revise last month's number up by a couple of thousand, so nothing really to see here. Anyway, we got core PPI, which strips out some of the more volatile products, came in at 0.1%, lower than the expected 0.2%. And natural gas storages came in at 57 billion cubic feet, expected to be 59 billion cubic feet. Also, Fed Governor Janet Yellen speaking in front of Congress. People were asking me yesterday why I wasn't even watching this after seeing the daily market commentary. Why wasn't I watching Janet Yellen? At the end of the day, not a whole lot is going to come out of this. We've already gotten the statements. We've gotten the minutes, things of that nature. That's going to be really what they're going to be talking about. And of course, true to form, all they were asking Janet Yellen time and time again was whether or not she was going to serve another 4 years. It's not necessarily up to her. Maybe she wants to or maybe not, but the president is going to discern whether or not she is going to have another 4 terms. If he wants her to, then she can stay on. That's her choice. But if he says no, then she doesn't have a choice. So it's neither here nor there. And then also later on today, we have Bernard speaking and 30-year auctions later on today. Anyway, crude oil moving higher today after being down quite a bit this morning. And I shouldn't say quite a bit, but it was back below that 61 fib level. So it was looking like it was going to be failing. But now it has since started rallying back, not necessarily off of any economic news necessarily, but just an overall move to the upside. I think people are starting to realize, the last couple of drawdowns were pretty significant over what was estimated. So anyway, on to gold futures. Gold back below this 38 fib level. It's really still stuck in this downtrending market. One funny thing that was at the FOMC, or not the FOMC, the Janet Yellen testifying, somebody held up a sign behind her. It said buy Bitcoin. Thought that was kind of funny. Got free advertisement for their Bitcoin, I guess. And then the bonds off quite a bit today, as expected. Janet Yellen probably saying that they're going to hold the course for the most part, but the spike yesterday was a little bit ridiculous, I thought. Then on to the Dow Jones yesterday, making a new historical high. I think somebody was saying it was like the 20th historical high this year. It's just basically every time it has a move to the upside, it's generally creating a historical high. It's that close, so it's kind of a ridiculous little thing to talk about, really. But the Dow Jones up about 30 points, not quite making a historical high today. And then NASDAQ moving up about 16 points. Pretty quiet day for the most part. Not a whole lot of economic data here or across the pond. Everybody maybe just listening to what Janet Yellen says, but not a whole lot going on there either as far as I'm concerned. So NASDAQ was up a little bit. E-mini S&Ps up about just over 5-6 points here. If we look at the breakdown of the mini S&Ps here, you can see we're on the highs of the day, trying to print those overnight highs. It looks like we might have finally done that. If we look at the overnight highs is 46.5, and look at the day sessions is 46.5. So we finally printed that overnight high within the day session. So that objective has been achieved. Really no discerning what market direction is right now, but one could easily see us just kind of bounce around in this little tight range just because there's not a whole lot of data coming out right now. Then on to what I've done. American Airlines, I talked about this yesterday. It looked like it could have been topping out. I was looking pretty good this morning off the open. It was down below that 53.5. As soon as it broke above this yesterday's high, decided to cover it both in my margin account and in my IRA. So having said that, lost a little bit of money on it. I'm not going to lie. It was in the July 53.5 calls. I was short. Originally sold them for 43 cents. Bought them back for $1.35. So a loser there. Was more of a technical move. Thought that when I put that on, we were pretty much confirmed to the downside. We got a big spike off of nothing and then continuation to the upside there. And same situation with the IRA, except for the IRA. If you remember, I had on the 53.5, 57 call spread that I was short. Originally sold that for 37 cents. I decided to go ahead and cover those 53.5 calls for $1.37. I have those 57 calls on for less than a nickel. I think it's 4 cents. So that's up a dime. I'm just going to let that ride out and see if we can get a big pop. I don't know if it's going to get much better than that. It's pretty close to expiration, but I'm just going to go ahead and let it ride just to kind of play around with that in my IRA. That's about all I got for you guys today. I haven't added a whole lot. We're moving into earnings season, so I'm basically freeing up a lot of margin to get into some of these earnings trades. Take advantage of that. If you've been around for a while, you know I love earnings seasons, but it is a bit more margin intensive because I like to sell the naked strategies during those earnings events. So keeping some of my margin that way. And then today we're going to be doing a webinar on the short put spread. So go check that out. I'm going to go into detail all the rules. Anybody can teach how to set up a put spread, but I'm going to teach you rules to increase your probabilities of success and kind of beat that theta out of this strategy, because theta is the thing that's going to eat at your profits, right? It's going to be the thing that decays on these some of these things. So I'm going to show you how to take advantage of this with the short put spread directional assumption and get rid of some of that risk. All right. Anyway, that's about all I got for you guys today. If you can't take that, take it easy.